All right. Hey everyone. Welcome and thanks for dialing in and joining. I know I'm a couple of minutes or a couple of seconds early, but I think that's okay. We'll go ahead and jump on and get started. It seems like we've been a lot more volatile than we really have over the last week. So there's been lots of news headlines, been lots of chatter, and so let's spend a few minutes kind of reviewing those. And then let's talk a little bit about market structure and what we on where it is and where we think it's headed. And then we'll jump through the weekly, the monthly, the weekly, and the daily charts. And on corn, we're going to get a little bit more granular even. What we're dealing with globally is really unprecedented. We're dealing with the geopolitical um, stuff, right, in Ukraine and all over the world. But we're also dealing with what existed prior to that, which is overwhelmingly tight food supply anyway. You know, it all started in 2020 when China really started buying, and I don't know if that was because they were just out of food and had lied about what their global stocks were, or if the Trump trade deal really did make them start buying. I really think it's the former. There was a period in time in 2016 when I think it was 16, maybe it was 17, but they magically created like 3 billion bushels of extra corn that previously wasn't on the world balance sheet. And our market just immediately priced that in and reacted stupidly and just assumed that it was true. And I think that a lot of the issues that we've been dealing with stem from that. It just took years for it to kind of develop. So what are we dealing with today, right? We're dealing with a historic problem in South America, and that problem is somewhat known regarding soybeans, and it's a complete unknown regarding corn. Best estimate is that we think that somewhere between 20 and 30 million metric tons of corn was not produced during their first growing season, and the market is kind of um, assuming that they're going to plant enough in the second growing season in order to outgrow the 20 to 30 million metric tons that they lost. But let's think about what that really means. That means that we were even tighter at the beginning than the USDA had said we were by 1 billion bushels of corn. Then you jump across the ocean and you get into Ukraine. And what are we talking about there? Well, we're talking about 30 million metric tons of corn not being able to reach the export market. That's another 1 billion bushels. So you add those two up, and that's a 2 billion bushel situation before you look at China, which says it has stocks, but the market's telling us different, right? Because they had to auction basically everything that they had in inventory that could be fed in order to suppress their food prices there. And that didn't work, so they had to outlaw speculation so that people wouldn't run the prices up. And you look at the consistency of that behavior to every other market that you're looking at. Look at nickel, look at gold, look at palladium, look at all these other unrelated commodity markets, and what you will continuously see and find is that China is doing everything that they can to keep pressure on those commodities so that they don't blow up. So now, between the 2 billion bushels we've lost there, that puts, or in Ukraine and in South America, you have a question mark on what China really needs and versus what they can grow. So that puts tremendous pressure on our corn crop. And now you start talking about the fertilizer situation. So kind of back up and realize that from just a pure supply standpoint, we are overwhelmingly tight, and we have production issues that are underpinning fertilizer and weather. And so when you look at the market structure, and if you read it and you read other analysts' opinions, what they're saying is you got to buy the back month. that all of the activity is going to be in December corn and November soybeans, because we need to ensure supply. You know, cotton's high, all the byproducts are high, all the minor crops are going to compete for those fringe acres, and so we need to bid them up. And so you've got this presumption that the back months are where the activity is. Well, let's think about that for a minute. You know, in a normal market, when you're bidding the back month up and selling the front, or holding the front constant and bidding the back, what are you doing? You're putting carry into the market. You're telling the world in the market that what you have on the front side is plentiful, and you just want to make sure that enough production is grown on the back end that we'll have a nice hefty residual carry out, so that we can have some consistency and normalcy. Well, that logic does not line up with the situation that we have. You don't sell the front and buy the back when, to begin with, you're dealing with the 2 billion bushel potential shortage, and you are overwhelmingly tight prior to any invasion happening. And so I think that what's about to happen is going to happen in the front month, because we have to ration corn and we have to ration soybeans. You know, we've talked about this for a month and a half, the fact that every step higher in price, we're not rationing demand, we're actually increasing it, because the profit margin on all the byproducts continues to widen. And we've never dealt with that in the history of commodities that I can find, where you have consistently higher prices and wider production margins encouraging new use. Look at the soybean crush, look at the corn demand, look at the ethanol numbers, look at oil. You know, everything is just melting up higher. And so corn has, at $7.30, you know, basically $8 cash corn, we have not slowed down demand. And the reason is partly because of the commodity prices, but otherwise it's because of what Bob talked about last week, which is the residual supply is just not there. You know, we have no milo. Wheat is tight. You've got a corn basis that's getting higher, harder and harder to originate and move. So you've got lots of issues on the front end that make it that make the argument that we've got to ration something a much more powerful argument than saying, no, we're good on the front end. We're gonna move. We're just gonna let the front end work its magic, and we'll bid up the back to ensure new supply. I think we got to do both. And so, what is a rationing event, right? Well, rationing is not a delicate process. It's an assassination. You have to go and you have to put somebody out of business. You have to invert their profit margin and kill them in order to turn off the spigot. And there's nothing pleasant about that experience when and if it happens. And so what you end up with is a parabolic type move. And the way these technicals are starting to line up is exactly what we're dealing with. So let's look at corn first, okay? So here's a weekly chart of corn. Okay, we've been talking about this. This goes all the way back to last year. We've talked about this before. We came up out of this cloud. Your normal move when you come out of a weekly cloud like this is $2 a bushel. We're $1 in, so you would think that we've got another $1 to go. We've retraced back to the prior highs, which we call the magnet. This is kind of a flip point. Once we get above that on a closing basis, we should see this market just go ahead and explode on up higher. So when will that happen, and where will it happen? Well, it's going to happen in the front month, because it's going to happen because you got to ration demand. So now let's get a little bit more granular with corn here. So this is your daily chart of the July corn contract. And I personally think that that's where this is going to happen. I think that what we're seeing here is everything's reset. So we have the peak that happened on March 7th, and we have a total decline from March 7th of 747 down to 692. So we got 55 cents there of decline, right? And during that, you have these indicators that completely reset to their zero lines. And so the question is that from this low, how have we unfolded on the move up higher? You know, are we? It feels like we're getting sold every time we clip above the 730 mark, and in May it looks like we're getting sold every time we hit 760. But in reality, look at this tilt that we've got here. We've got continuous higher lows coming into the marketplace. If we break this down and come to a shorter term chart, I'm going to go from a daily to a 240-minute chart, okay? So that each bar now represents 4 hours, each vertical bar. And you can see what we did onto that sideways low. We've moved up significantly with two massive swing reversals here that failed on the 240-minute chart. So if you're looking at corn from an Elliott wave standpoint, you've got a 3-wave correction, and now you've got a 1-2, 1-2, and it's not going to take much for algorithms to absolutely jump on this and propel it higher, because a 1-2, 1-2 is the most bullish count you can have from an Elliott wave standpoint. And yes, it's happening at 750 corn. It's telling you that this has all been basing activity for something much, much higher in order to move forward. So last thing about corn before I switch over to soybeans is, you know, what's going to break it? You know, you just try to keep things simple in your head. Headlines will move it short term, but in reality, we don't have any new corn coming to market for months. You know, Ukraine is planting. South America just planted. We're getting ready to plant. We don't have any residual supply coming in. So any hint of weather disruption or continued tightness has to be bought, because the only place that you can defend and ensure supply past our growing season is in the front month by rationing. It's the only place that it can happen. So I believe that that's what this market's telling us. I believe that that's where we're headed. And I think it's going to be explosive and will probably look a lot like wheat if we have any sort of a weather hiccup at all. Now, we will not go in straight lines. And if you're long, you know, you're going to get the privilege of holding it through kind of these big, fast and furious breaks. But you have to recognize that for what it is that that's just a normal bull market. You know, I read one guy that wrote, you know, bull markets bucks stomp and snort and try to throw their riders off. And that's exactly what this activity is, right? And so I think you should just kind of mentally be ready that, hey, corn's got to go higher, because there's just nothing in the short term that says we got to go lower. Now, what will break it? Well, okay, a couple things, right? One, a deepening conflict where we actually ban exports. That would do some damage. It starts raining, the weather patterns shift, and it starts raining an inch a week in South America and here. You know, that would do some damage. Short term, next week, the USDA comes out and says, oh, hey, we found more corn and we had more stocks than we thought we would in their quarterly stocks report. Well, that would definitely do some damage. So I'm not saying it can't go down, but I'm saying something has to change in order to push it lower. We've got to change that supply situation in order to push it. All right, let's jump to beans, because I'm getting overly windy here on corn. All right, soybeans. What do we know about soybeans fundamentally? We know that that there's no new supply coming to market until we harvest. And we know that our harvest is a long way away, and we know that that we haven't even planted it yet. So what's going to break soybeans? Because the Brazilian crop and the South American crop in total should be getting smaller, not bigger. So what's going to break them? And I don't know what that could be, other than you know, some sort of policy intervention that changes the rules. Otherwise, you got to look at where we are, right? This is your monthly chart. We're straight up. We're coming right up onto our all-time high at 1795. I think we're stagnating here just a touch before we break right on up through that. Let's look at the weekly chart. It's even more bullish. Here we are at our magnet off of the summer trough. We've retraced right back to it. We've now based for 1, 2, 3, 4 weeks before I think we're getting ready to propel this thing on up higher. The fact that we've closed, once we close above the 1690 level on the front month, once we close above that, the odds greatly increase that we attack this 1875 to 19 level. And honestly, this becomes about a 60% probability up here at 20 bucks once we are able to close above 17. So why is 17 such a barrier? Because the algorithms know that these numbers are up here, drawn off of the retracement from the summer high to this trough right in here. So everything here looks really, really strong and good. If you look at your July or your May soybeans, they're extremely strong. They've been in this flag. Consolidation favors continuation. We've been saying it for weeks. We came right down to our zero lines, and now a breakup out of here should result in a thrust up into that higher area that we've been talking about. So what do the new crops look like? Well, they're really strong. I mean, that shouldn't surprise anybody because, yeah, we do. We have to ensure we're going to plant them, and we have to ensure that there's corn. New crop corn is breaking out to new highs every day. So, yeah, they're strong, and they're not going anywhere until we grow a crop. All right, now let's talk about wheat for about 4 minutes. You start reading all the talking heads, and they say, oh, hey, we priced ourselves out of the export market. We're going lower. No, we didn't. Our market doesn't care about that. Our market cares about preserving our supply, not about being competitive into the world market, right? We're the residual supplier to the world on wheat, not the primary. The primary supplier is suffering massive infrastructure damage because the world's greatest idiot is destroying it, right? He shut down 40% of the world's wheat supply and made it arguable at best as to whether or not it's going to get into market. You start dealing with, you just think about the problems that they have, right? What do we do in order to move wheat? Well, you got to put it in a truck. You got to move it across country to a facility. And then that facility's got to have labor, and it's got to have people freely working, and it's got to have the capacity to load it and then unload it and handle it and care for it. And then it's got to have a truck driver or a train conductor ready, willing, and able to come and perform his services in order to move it back across country to a boat who has to have an existing infrastructure. You just go through all of the things that we take for granted on a daily basis, and you think about it in terms of what's happening over there, and how in the world are they going to export a crop when you've got to cross a war zone in order to make it happen. So I think that the logic that exports are going to be fine, in time, yeah, that's right, it's going to be fine, but not in the nearby. So technically here, what has wheat done? Well, on a monthly chart, we powered up through prior major resistance points. We came right up to a major inflection point, right at the all-time highs, and then we retreated. What do markets normally do when they break huge resistance levels? Well, they come back down and they test them, and then they work themselves higher. Nothing on this chart says anything other than higher prices are coming on wheat. The question is when. Same thing for the weekly chart. Huge thrust up, and now we have a consolidation. What does consolidation favor? Yep, continuation. I don't see any reason to think that wheat won't continue to propel itself on up higher. I don't know if that happens in the May contract. I don't know if that happens in the July or September. I don't know, but I think that the last thing you want to do is step in and short this thing, because we don't have any clue what is going to transpire overseas. We have no idea just how badly the world needs us to be a residual supplier. And all that's before you get to our own weather issues, which, hey, the rain's been helpful, but notice the market's not really responding to it yet either. So each one of these markets is dealing with radically unprecedented problems. And I don't think that that's done. I think that the last 3 weeks of coiling has been ultimately very, very bullish. Now, in the last minute here, let's talk about the next week's report. I'm not telling you to go out and just buy the market. If you're going to go out and buy it ahead of this report next week, this report will generate volatility, and I would expect it to generate volatility both directions. So I think the thing to do, if you're going to trade the report, is you've got to do it in some sort of a call option. You've got to do it in some sort of limited risk capacity so that your upside's open, and then we can manage the downside if we end up with bearish surprises and we've got to work itself lower. I don't know what the odds are of that. I do know that the government wants lower food prices, not higher, and so I would think that that would lead them to generate a bearish report. Right now, that's a total conspiracy theorist. I'm not saying that's going to happen, but that's my sense of it. So so I would be limited risk. I think it makes absolute sense to be long this market in some sort of limited capacity. I don't think that the downside is huge, even if we do get a buying opportunity off of a bearish report. So, all right. I hope that generates some questions. I hope that at least makes some sense. If it doesn't, please call me. Remember, there is tremendous risk trading commodity futures and options, and when you do so, you should do it in light of your own financial condition, and you should consult with an advisor before you do it. All right, that's what I've got for you this week. I look forward to talking to you next week, and thank you for participating.